Hello and welcome to another backtesting video. In today's video, we're going to dive deep into the world of support and resistance and test a simple yet effective strategy on the daily level. Get ready to witness the power of backtesting and gain valuable insights that will boost your trading performance. I'm your host Panos, and let's get started with backtesting a simple support and resistance strategy on the daily level. Before we embark on the exciting backtesting journey, let's review the fundamentals of support and resistance and understand why they hold such significance in our trading decisions. Support and resistance are key levels on a price chart where buying and selling pressure converge. Support acts as a price floor, preventing it from falling further, while resistance acts as a ceiling, preventing it from rising higher. Also, the bigger the time frame, the bigger the likelihood that those levels will be respected. Identifying and trading of these levels can greatly enhance our profitability and risk management. Now that we have refreshed our understanding of support and resistance, it's time to put them on the test. But first, let me introduce you to our simple yet powerful strategy that we will backtest today. Our strategy is straightforward. We identify the clearest support and resistance levels on a daily chart and patiently wait for the price to reach either of these levels. When price touches our support level, it's a signal to buy, and when it reaches a resistance level, it's time to sell. We will put our stop loss below the support level or above the resistance, and we will aim for 1 to 2 risk to reward. By following this approach, we aim to take advantage of potential price bounces and breakouts of these important levels. In the backtesting process, we will examine historical data, apply our strategy rules, and evaluate its performance over a selected period. This gives us an objective view of how effective the strategy has been in the past, helping us to make informed decisions for future trades. Alright, enough theory. Let's dive into trading view and backtest our support and resistance strategy on the daily level. I'll walk you through step-by-step process so you can follow along and replicate it with your preferred trading software. I chose TradingView because you can backtest on the daily time frame with a free plan, so no additional cost to you. For the backtesting process, we will need two tools, TradingView and a spreadsheet. You can have in both access without any cost. Once you open the TradingView, we choose the pair or instrument we want to backtest, which in our case is Euro-USD. Then we open the Google Sheets and we create columns with the trading information we need to collect during the backtesting. In this case, it's going to be the date, the duration of the trade, the pair, if it's a buy or a sell. I usually take a snip of the trade to have a visual, the risk to reward, the result, and then the profit. In this case, we will backtest with an initial balance of 10,000 and we'll see how we will end up. You can add or remove information according to what's important when you're backtesting. As we backtest, filling the spreadsheet with information mentioned, we'll be able to examine various metrics such as win rate, profitability, drawdowns, and overall performance of the strategy. By analyzing these results, we'll gain a deeper understanding of the strategy's strengths and weaknesses. I will also give you my opinion based on the results if it is funded challenge friendly. Once you are ready, you go back to TradingView, you choose the daily time frame, and then we press the replay button. Once you press the replay button, a blue line will appear where you can choose the initial point of your backtesting. So you slide it left on time, and once you go to a date that you feel comfortable starting your backtesting, you click. Once you click, every bar from the point you clicked on will disappear, and then you can start backtesting. You can control the movement of the charts with the control buttons you will find at the bottom of the charts, and you can either play and pause where it moves like candle by candle, or you can have it on pause and manually push the forward button where it gives you the next candle. As we mentioned, the strategy is quite straightforward and simple. We will mark the support and resistance zones on the daily chart, and we will wait for price to reject of one of those, to reach one of those zones, and we will enter based on the expectation of rejection of those zones. So in this case, price dropped below the zone and closed below. Let's see the next candle, and that closed bullish. So I'm gonna adjust the zone, make it a little bit bigger, and in that case I would enter a buy on the next candle with stop loss on the previous candle. And now, because 1 to 2 is above this zone almost, I will be careful. If it rejects, I'm gonna close the position. And here it's rejected, so I would close the position here. Almost in 1 to 1. So in that case, I would go to my Google Sheets. I will mark the date that I opened the trades. The duration of the trades, it took 1, 2, 3, 4 days. Here is your USD. It was a buy. A trading snip you can take by pressing the copy link from here in TradingView and paste it there. The RR was 1 to 2 initially, but we closed 1 to 1. Result was win here, and there you go, and you repeat the session. Now technically I would wait for a retest one of those zones, but since it's quite small and we're never gonna see here 1 to 2, I will wait a break between those zones. That way I will continue backtesting based on those rails, and I will get back to you with the results. And here you have it. As you can see, the strategy in a year gave a total of 18 trades with a 53% win rate and 11% gross annual return of the initial balance. Also, it may take some trades multiple days to hit either take profit or stop loss, so it is not optimal strategy for funded challenges that have specific profit targets in a limited time. Nevertheless, you can backtest and add multiple pairs on your portfolio as you go forward. It is important to remember that backtesting provides insights based on historical data. Market conditions can change, so it's crucial to combine backtesting with forward testing and adapt the strategy accordingly. And that's a wrap for today's video. Remember, successful trading requires practice and continuous learning. Thank you for watching, and I will see you to the next one.